So this stock showed up in my filters. This is Genesis International. Let's do an analysis of this stock. So as you know, as usual, I do four kinds of analysis: comparative analysis, technical analysis, fundamental analysis, and market analysis. You can add one more kind of analysis to your uh, overall approach to the stock is liquidity analysis. Okay. Now, as per our filters, I am looking at stocks which have average daily volume of more than 200,000 shares traded on a daily basis. So you see this volume line that has to be minimum 200,000 shares traded. Plus, in the Indian stock market, I am looking at stocks with price of more than 20 rupees and average rupee volume as more than 1 crore. 1 crore is 10 to the power 7. So if you start playing with those rules, so if you loosen up those rules, you are slightly increasing your risk because you are probably buying a stock that is illiquid. Now that does not this stock does not have that problem, okay? Because as you can see here, this is 537,000. But the reason why I raised the issue of liquidity analysis is because the criteria that I have discussed is the preferred criteria. The closer your stock is to the preferred criteria, the lower is your risk. And the farther away from the criteria your stock is, the more is the risk involved. Okay, you have to understand this. So you can play around with the criteria, no problem, but you should be aware that by changing what eligibility criteria, how does it affect your risk management. But anyways, that's a discussion for a later video. Just to mention comparative analysis, technical analysis, fundamental analysis, market analysis, liquidity analysis. You can do, if you do these five types of analysis, you will get a very good understanding of the stock that you're or the situation that you're getting into. Okay. So let's do a comparative analysis of this stock. So let me open this. Have a look at this consolidated. Look at the EPS growth in the latest 3 quarters, triple digit EPS growth. Look at the sales growth in the recent 3 quarters, accelerating sales growth, triple digit sales growth in the latest quarter. Okay. What is the return on equity? 5%. We want this number to be 17%. So I'm starting with fundamental analysis because that is where I first tend to look for. Uh, Return on equity is 5%, which is not great. We want this number to be 17%. And if the return on equity is not more than 17%, I look for margins. So after tax margin, you will find here. Scroll down. This is after tax margin. Highlight the latest 10 years. Okay. And see where your stock is. So as you can see, latest years from 2019 to 2024, 1, 2, 3, 4. In the past 6 years, the stock has been making a loss or reporting a loss for 4 years. So 4 out of 6 years were in losses, but then it again came back to profitability. So maybe this is a turnaround kind of a situation. Before that, before those losses, there was some margin. So this margin is not at an all-time high. So fundamentally, there is a problem with margin and there is a problem with return on equity. EPS growth, sales growth, I don't see a problem. Okay. Let's look at annual EPS. So 1, 2, 3. 3 years of positive growth in the EPS. Okay, which is very good. EPS growth rate, this is 3 to 5 years of average annual growth rate. So this should be more than 25% minimum. Okay, that is good. Earnings stability should be less than 25, less than or equal to 25. But this is 99, which is not good. And this is understandable because we saw 4 out of 6 years the company was reporting losses. That is why this number is very large. Okay. So if we look at the quarterly EPS, annual EPS, EPS growth rate, EPS stability, sales growth, and return on equity and margin, we can say that fundamentally the stock looks strong. I would not say very strong. There is a difference between strong and very strong. Okay. Very strong means good EPS growth, good sales growth, good return on equity, margin at an all-time high, EPS at an all-time high. That's a very strong stock. Okay, and there are stocks like that which I had discussed in the previous some of the previous videos. So I would call this a fundamentally strong stock, not a very strong. Okay. What about technicals? You see blue, green, red. So the stock is in a confirmed stage 2 uptrend. There is a blue dot inside the base, which means the relative strength line is at a 52-week high. So the stock is doing very well compared to the Nifty on a relative basis. Okay, price is trading above all the three moving averages. All the three moving averages are sloping up: the 50-day, the 150-day, and the 200-day. There are nice 4 points in the base. So let us draw the base. So I will draw this base for you. The buy point is in the green zone. So now we are in technical analysis. Okay. So the buy point is this. So this is point 1, is point 2, point 3, point 4. So point 3 becomes our buy point. So the high of this candle, which is 988.70. 988.70. Okay. And the distance between current closing price. So I am recording this video on a Sunday, which is 5th of January. So the distance between the current closing price and the yellow line is less than 5%, which is what we want. And the distance between point 1 and point 2, I think it is less than 10%. So it's a very high quality A grade base. The basing height itself is less than 10%. So uh, it's a very tight base. That is what we want. We want tight price action inside the base, and the volume is contracting inside the base, which is what is a characteristic of a stage 2 stock. So technically strong. What about the base count? This is base number 3. Okay, they say they write stage number 3. Okay, so it has already broken out of stage number 3, sorry, base number 3 within the stage 2 uptrend. Okay, already broken out 10% from pivot, so 10% from this level. So we can say it is in the middle stage in within the stage 2 uptrend. So neither early nor is it late, so somewhere in the middle. Okay, and there is a blue dot inside the base. So I would say technically strong, not very strong again, because very strong would be if it was in the early stage base within the stage 2 uptrend. So we can call it strong. So fundamentally strong, technically strong, not very strong in both the departments. Okay. Next, comparative analysis. Here is a problem. So price strength is okay. This number should be more than 80. Accumulation distribution rating, which is the buyer demand, should be A or B, which is fine. Group rank is a problem. So 53 is not ideal. We want that number to be less than 40. Okay. So there is a problem here. Plus computer tech services. Let's go to industry groups. Computer tech services. Computer tech services. Here it is. So if you see, 6 months ago, the rank was 127. Now it is 53. So the rank has improved. So the industry strength has improved. There are 163 stocks inside the computer tech services. So it's a crowded industry group. So from 127, it has gone to 53. So industry rank has improved. So out of 4 factors, 82, A, and the group rank and the industry strength, out of 4, 3 are in our favor. So we can say the stock is comparatively strong, not very strong. So now we have a stock which is comparatively, technically, and fundamentally strong. But wait, there is one thing we need to look at, okay, which is within the industry, where does the stock stand? We want to put our money in leading stocks, right? So go here, check stocks. Okay. Now see TCS, Infosys, HTL Tech, Wipro, LTIM. Okay. These are the top 5 stocks as per market capitalization. Where is Genesis here? If we scroll down, here. So it is not even in the top 20. Look at the market capitalization of Genesis, 3000 crore company, 3000 multiplied by 10 to the power 7, that's rupees. 3000 crore compared to this number. So the stock is nowhere, in no way is the stock a leader in its industry group. There are other companies which are much bigger in size, bigger in business than this company. So we are not dealing with a market leader. So that's a big problem. Okay. Plus, it's a small cap stock. Small cap means small capitalization. So there is bound to be volatility in the stock. So it is not an industry leader. So industry leadership comes as a part of comparative analysis. Okay. How is the stock placed within its own industry group? Now, leadership, earlier I had defined what is a leader. What is a leader? Leader doesn't mean that it should come in the top three or top five in terms of market capitalization. Leader means a stock which displays highest sales growth within the industry, highest EPS growth, widest profit margin, highest return on equity, and highest relative price relative strength. Okay, so these are the five things: sales, EPS, ROE, margin, and relative strength. If you look at these five parameters, and in each of these parameters, if the stock comes in the top three or five within the industry group, that's a leader. So you look at all the stocks sales growth, you look at the sales growth of all the stocks latest quarter. If your stock comes in the uh, top three or five, that's good. Then you look at EPS growth of all the stocks in the industry group. If your stock comes in the top three or five, that is very good. Then you look at the ROE for all the stocks in the industry group. If your stock comes in the first three or five, then it is considered to be very good. So if your stock comes in the top three or five in the industry group, when you compare it to other stocks in the industry group, that's a market leader. Okay, it is not the market capitalization that decides whether the stock is a market leader or not. I personally use market capitalization because it simplifies the analysis. Because if you want to look at all the stocks in the industry, you will need to know the EPS growth of all the stocks in the industry. In one sheet, you need to have that data. Okay. And that data is not presented here. Okay. I don't want to complicate my analysis. I just want to keep it simple. Does it come in the top three or five as per market cap? If yes, fine. If no, maybe I will investigate further, or if there are other opportunities, I will consider those opportunities. I will just skip this stock. So, in my view, this stock may be a market leader in terms of sales growth or EPS growth, because uh, it has triple digit EPS and sales growth. But if you look at ROE, ROE is 5%, single digit ROE, then you have margin is around 10%. Obviously, margins of other companies are going to be higher than this company. So ROE, it fails, margin, it fails. Relative strength, if you look at relative strength, where is Genesis? Genesis doesn't even come in the top 15. Yeah, doesn't even come in the top 20, I guess. So if you look at ROE margin, I have not looked at it here, but I can guess. I mean, 5% ROE is poor, margin 10% is poor. Obviously, there are going to be software companies here which have serious margins in the business. Okay, 10% is too small. So ROE, margin, and relative strength. The stock fails to be a market leader within its industry group. That is the discussion I wanted to make. It's not about market capitalization. It's about sales, EPS, ROE, margin, and relative strength. Okay. So clearly, this stock is not a market leader. So probably this stock might not get the attention uh, that it deserves. But let's see. I am currently rejecting the stock because for another reason. Okay. So you look at market conditions. They say that the market is in a confirmed uptrend, so you look for fundamentally strong stocks. Now, in the case of Genesis, it is strong but not very strong. And what is the sustainability of this confirmed uptrend? So, if you look at the chart of Nifty, here is the chart of Nifty. Okay, Look at this chart. Do you think that the general market index in India, this is the Nifty 50, the main index of India. This covers, I think, 60 to 65% market capitalization. So this is like a representative of the Indian stock market. Have a look at this graph. Do you think this is an uptrend? The Nifty has closed below the 50-day simple moving average. Okay, because of this candle, Market Smith has declared the index to be in a confirmed uptrend. But one candle does not define the entire stock market. We have to wait and see whether these highs are taken out, then whether this high is taken out, whether this falling window gets broken. I think there is a falling window here as well. I have not checked, but definitely there is a falling window here. So the market has to do a lot of catching up before it really gets into a proper uptrend like you saw here in this kind of an uptrend where it was clearly in stage 2. Now the green line has gone above the blue line. So 150 is above the 50-day simple moving average. So the market, although Market Smith has declared it as confirmed uptrend, I am a bit nervous. Okay, because I see falling windows inside the chart of the index. So if we summarize the whole discussion, comparatively the stock looks strong, not very strong. Technically it looks strong, not very strong. Fundamentally it looks strong, not very strong. Market conditions, I'm nervous because uh, you still have a lot of catching up to do. Plus, the stock is not a market leader. It does not come close to being a leader. It does not display the characteristics of a leader. Just because you have triple digit EPS growth and sales growth doesn't mean that it becomes a leader. You have to look at other factors as well. So, if the market was truly in a confirmed uptrend like this, in that case, I would have probably taken a position in the stock. But currently, since the market conditions are not ideal, I choose to skip this stock. I choose to reject this stock in spite of the fact that it is showing strength in each of the three departments. Remember, it is showing strength in each of the three departments, but it is also showing weakness in each of the three departments. Like in fundamentals, it is showing weakness in ROE and margin. In technicals, I think it is showing weakness in terms of the base count. The base count is not early stage. Uh, Fundamentals, technicals, comparatives, it is showing weakness in terms of the industry group rank. So in each of the departments, there is one weakness. Okay, that could be a problem for this stock. And that is a risk that I don't want to take. Plus, it is not a market leader. So that's a risk that I don't want to take in this market condition. I would prefer to go with stocks which are more clean, which comes in the top 3 or 5 in terms of market capitalization. So in this stock, I would choose to stay away. Initially, I thought that I would take a half position in the stock and let's see. But let's wait. Let's wait for the market to come to a proper uptrend. Currently, we are in weak market conditions. If the market was strong, I would have probably taken half position or maybe full position in the stock. That I would have taken a judgment on that later. But currently, given current market conditions, I choose to stay away from this stock because I see little bit weaknesses here and there. Major reason for my rejection would be industry leadership. There is an entire chapter in William O'Neill's book where he talks about a leading stock, where I think it's chapter number 7 in How to Make Money in Stocks, written by William O'Neill. Read chapter 7 3 times. He gives on the second page, he gives the definition of a leader. Okay. And this stock does not fit that definition. So that's my analysis. If you notice, I don't go into the details of the business or the details of the sector. So I am not concerned about what business the stock is in or what sector the stock is in. I am looking at industry strength, but I am not going deep. Why am I not going deep? Because I want to keep my system simple. I am looking at 500 stocks in a week. If I start analyzing the business of each and every stock, well, then it would take me a lot of time. It would result in a burnout. I am looking at the key factors, the comparatives, technicals, fundamentals, market analysis, and liquidity. That gives me a overall view of the stock. Now, once I take a position in the stock, then I might be interested in news articles, the earnings estimates and surprises, and things like that. Who are the clients of the company? What is the competitive positioning? And how long is it likely to stay above the 50-day simple moving average? Things like that. Okay. I don't want to do all of that analysis before I buy the stock. Okay, that is something that value investors should be doing. I am a positional trader. Okay, so I want to look at key things that might result in a breakout. And once the stock breaks out and I have a position in the stock where I'm properly managing my risk, then I might be more interested in the stock. So, for example, in Dixon, if you see, after I bought the stock, I started looking at news articles where every other day Dixon was adding like a new client or new joint venture with some Chinese manufacturing company and things like that. I started paying attention to these small things because now I have money at stake. Okay. So just for the sake of keeping my system simple, okay, I look for a certain specific criteria in which the stock comes. Once that criteria is met, I try to take a position in the stock and then I will see later. If I start reading balance sheets and annual reports of all the stocks that I am scanning, I don't have time for that. Okay. So it is the decision is up to you how deep you want to go into the stock. You could buy this stock no problem, but you have to understand what business it is in, what sector it is in, because you are not going with a market leader. You are going with a stock which is less than 5,000 crore market cap. Okay, it could turn volatile. Okay, base number three could be a late stage base for this stock, right? I don't know. I'm not in the business of predicting or forecasting. All I'm saying is that based on the overall discussion that we have done, I feel uncomfortable getting into the stock simply because market conditions are weak and I'm not getting a leader. Okay. If the market conditions were weak and if I'm getting a leader in terms of market cap, triple digit EPS sales growth, something like a Dixon, something like a Keynes, those kind of stocks, they true market leaders, which gave double digit return in 2 to 3 weeks recently, even while the market was down. Okay, institutionally supported stocks. This stock doesn't seem to be supported by institutions because the market capitalization is only 3,000 crores, right? So, this is the kind of analysis that I am doing before getting into the stock. This is the kind of depth you should have when you are doing your and when you are looking at a particular stock. You are taking a complete 360-degree view of a stock. You can go deeper. No problem. You can study the annual report. You can go as deep as you want. But before going deep, just do this peripheral analysis of the stock where you are looking at it in terms of comparative analysis, technical analysis, fundamental analysis, market analysis, and liquidity analysis. Take these 5 points of view before you go deep into a stock. Okay. So my ultimate verdict on the stock is that I reject it. See, I took more than half an hour, I think, just to reject the stock. But that's a skill that we all need to develop. Because remember one thing, the market is not there to give you money. The market is there to take your money. I will repeat that. The market is not there to give you money. The market is there to take your money because you yourself are the market. Are you in the market to give your money? Are you in the market to donate money? No. You are in the market to take other people's money. So when you are facing the market, you are facing people who want to take your money. They don't want to give you money. So you better be good with your stock selection process. Okay. So use the process that I am using, the 5 kinds of analysis. It will help you in your stock selection. You have to master 3 skills: stock selection, trade execution, and trade management. Okay. Before you get into trade execution and trade management, you better become good at stock selection, because stock selection is like half the battle won. Okay. Take care. Thank you so much.